Welcome to the Monday edition of FreightWaves Now. I'm Emily Zink, joined by Donny Gilbert. Donny, things are looking okay if you're a shipper, but if you're a broker or a carrier, this is kind of indicating something not so great.
Yeah, I want to talk about dry van tender rejection rates today, but I first want to start off with our volumes for the national volumes. We came through here, we saw volumes start picking up, and right around in here is the 4th of July.
Okay.
And naturally the volumes dropped for the holiday, but they rebounded back above 10,000. So the market's fairly healthy in terms of volumes. But the real story are the dry van tender rejection rates. Back here in May, early May, we kind of hit rock bottom from the big decline coming down from 2018. And we started picking back up through June, which was starting to look, real exciting.
Yeah, oh yeah, it just keeps going up and up and up.
Yep, we built up to around the 4th of July holiday, and then the tender rejection rates just dropped again. We were almost to 6%, and they dropped all the way back down to 3.86%. And this is rivaling what was happening back here in April. So this entire growth period that we saw through July, we've now bounced back down to where we were in April. So I want to kind of bring this up on a national map and kind of go through the markets.
Yeah.
So starting out in the Northeast, Augusta, Maine market, which is about really, Augusta, Maine, the main center is about 140 miles from Boston. We have about a 7-8% tender rejection rate in this market. So actually drivers, if you're in the Boston area, which is less than 2% on tender rejection rates, you might want to move north a little bit for, a little bit better rates. Pittsburgh as well is about 8%. Some of these lighter shaded blue areas, they're around 4 or 5% or even less. The areas that are in white are 2.7% or less. When you're getting around to 2.7% or less, those spot market rates are actually below contracted rates.
Okay.
So in some of these markets that are shaded in white, your shippers might actually stop putting out their contracted rates and start moving their loads over to the spot market looking for cheaper and cheaper rates.
Because if you're a shipper, you're getting a pretty good deal there.
Yeah, right now in this area, and even the light blues and the whites, this is a promising sign for shippers.
Okay.
They're enjoying this.
Yes.
Now when it comes to the fleet side, it's a struggle because it's pushing the rates down, putting a downward pressure on the rates. And if you're in a brokerage right now, with the downward rates from the shippers and drivers trying to push the rates up, it's going to compress those margins.
Is it usually like this in this time? Because usually you talk about the summer heating up and things looking great. So is this almost unheard of for this time of the year?
For this low, yes. Normally after the 4th of July, we'll see a dip in revenues and see a dip between. It's kind of that calm before the storm. We're in that area between the holiday of the 4th of July and the beginning of the Christmas season. So starting in fourth quarter, it will pick back up a whole lot. So you kind of got this dip in the market as we go through there, but we didn't expect it to dip this low.
If you're a carrier, where would you want to move? Where would you recommend moving your truck to right now?
Right now, the Southeast is, it's very flat right now when it comes to tender rejection rates, but there are a few hot markets. Jacksonville is up around 9%. Mobile's around 10%. So those are two fairly strong markets for the Southeast. Get up in the Iowa, Nebraska area, you're looking at tender rejection rates between 10 and 13%. Moving across the west, El Paso's around 12-13%. So here's another good, strong market. That's a border town. You got a lot of freight coming in through Mexico. Las Vegas is around 9%, but also the contract rates out of Las Vegas are normally pretty low already because a lot of the freight just moves back to Southern California. But the entire West Coast, you're looking at less than 2.7%. So really, you need to pay attention and try to aim your trucks to where there's higher volumes because the rates now are not very strong. So you need to keep your drivers moving and keep them, otherwise they'll allow you to leave your company and quit, try to find work elsewhere. Yeah. So important, aim towards the blue when it comes to volume. Rates right now are struggling.
You are watching on YouTube, so definitely hit subscribe if you haven't done it already, and follow us on Facebook, Twitter, and Instagram for the latest updates. And Donny will be back with us tomorrow. We'll see you then.